Well, a lot of people are thinking about refinancing this year as rates continue to tick down a little bit, but what mistakes are being made in that process? We'll talk about that, but also mistakes in general when people are looking for a home and buying a new home. We'll break that all down next with Bill. Welcome into the Smart Mortgage Show. I'm Ben George with Bill Litton, as always, Regional President of Cross Country Mortgage there in Chaddsford, Pennsylvania. Bill, today talking about some of the mistakes people make. And I was kind of thinking about this from a refinancing angle first, because I think right now still refinancing is up in general, right, as rates continue to tick down. And more and more questions are popping up about, hey, should I refinance? Is now a good time? And you want to make sure you get it right if you're going to go down that path, correct?
There's a lot of considerations, and you definitely want to make sure that you have somebody looking at the scenario, looking at the pros and the cons, because I've seen some really interesting loan estimates from other lenders that I think are just trying to push another refinance through without in any way, shape, or form being concerned about what's best for the consumer.
Yeah, exactly. And we want to make sure that you're aware of that, and just make sure you avoid some of these mistakes. Bill's working with people all the time at Cross Country Mortgage on refinancing and home buying, first-time home buyers, second-time home buyers, and on. But we just want to make sure you're aware of some of these mistakes that happen, just so they're on your radar. But having a good lender will also help you during this process to make sure you are avoiding these mistakes as well. So we'll start with refinancing and then shift into home buying in general, Bill. So first, from a refinancing perspective, what are some of those mistakes that you commonly see and you want people to avoid in this process?
So one of the big mistakes that I see, this is a real life example. I just saw this about a week ago. There was an estimate sent to me by one of my customers, and they said, hey, I got this from this big online lender, and they can get me to a 5% interest rate, or it was like 5.5% rather, on a 30-year fixed rate mortgage. They said, well, based on where your rate is, that the new rate is low enough for that to make sense. But did you see here where they're charging you an additional $20,000 in points to buy the rate down to 5.5%? What that really means is we always look at what is the savings and what is the cost, because there's closing costs. And a normal recoupment period for the costs would be dependent on how long you think you're going to be in the home, right? But also there's 3 years is about where we'd like to see it, or better, that you recuperate the costs. If the costs are $3,600 to refinance and you're saving $100 a month, in 36 months, you've recuperated those costs. And now you're truly saving money. In this analysis, it was like 15 years until they recuperated those funds.
Wow. Yeah.
Yeah. Now, an argument could be made that the lower rate, the biggest, most important thing was cash flow. They just needed a lower payment. But these folks didn't need a lower payment. They're just trying to save money on interest. That question was never even asked. So while rates are important, we got to look at the whole picture. We got to spell it out. We've got to ask a whole lot of questions. So that right there, I think, is the most important. Is, are they charging you an exorbitant amount to get you that interest rate?
I mean, hopefully, Bill, your lender is walking you through that math, though, right? Because that kind of raises a red flag to me that, a payment that or a cost is that significant. Seems like something that you'd be discussing with the customer. Hey, making sure you understand, here's what it's going to cost. Here's what it's going to look like over time. It might not be your best option potentially.
Yeah. And what we always say is, we have our initial discovery call. We take notes. What's your goal? And say, look, we're going to send you a loan estimate, break down all the details. We want to look at the cost and the savings. And it's the relationship between the cost and the savings that determines if we should do this refinance or not. And that all, of course, how does that fit into your plan with the property and your financial plan? So, Ben, to your point, yes, we go over that in great detail, pointing out the numbers, making sure that the math makes sense. Once you see everything written out, on the loan estimate, but then we break out the savings, the cost, the details. That's how you decide whether you want to move forward or not. Not someone just, sending something with a rate on it and not explaining how it all fits together.
Well, is that the biggest mistake that you see, is just people not doing the math to where it truly makes sense financially to actually refinance, where maybe you're better off just kind of staying with where you are?
Over the past few years, more often than not, we've said, don't do anything right now, but we're going to monitor your file. And when the rates get into this range, that's when we're going to call you. So we're not trying to make more business for ourselves right now. We're waiting until the market cooperates. There are a lot of companies that are trying to meet quotas, and they're just trying to make business however they can. And it's legal to do so. It's just not in the best interest of the consumer all the time. And that's what we want to caution against.
What other refi mistakes do you see, Bill, or just people need to be aware of when going through the process?
So the other thing that we see is just like, let's be thoughtful about, let's just say, for instance, when you refinance, the goal is if all you're trying to do is get the rate down, then the goal is to pay the loan off either sooner or by paying less interest. So one of the things we always ask is, you've got $5,000 in your escrow account, right? You're going to get that money returned to you, and you're going to skip a month's payment. We need to build a new escrow account. Can you bring that $5,000 to the table? It'll keep your loan amount $5,000 lower, right? It's going to save you a lot of money over time, right? So we're constantly thinking, where do we maximize dollars? That one consideration there can save $5,000+ over the life of the loan. And that's kind of minor, but if we apply that in a lot of different places, now we're saving $100,000, right? So being thoughtful about how much do we want the new loan amount to be, right? Also, the higher we push the loan amount, the higher the house needs to appraise for. So it makes it harder so it could make it easier to get the transaction done with better terms and less interest paid back to the bank.
All right, very good. So again, those are a couple of the more common refinancing mistakes. What about just in terms of home buying? I know some of that carries over, Bill, when you're buying a home and purchasing it for the first time. But what are a couple of things just to be aware of and just to make sure you don't misstep?
I would say one of the biggest mistakes is just, if you go online, there's a lot of mortgage rate quoting going on, which is a lot of people chase the quote. But what you're really looking for is who's if you Google me, you're going to see 22 years of positive reviews and 100% execution. And the fact that we always deliver guaranteed based on what we told you we were going to deliver on. Online, again, you maybe 50% of the time they deliver on it, maybe 50% of the time you don't get what they told you. So it's working with a trusted person who can get you to the finish line correctly, and also for your own sake, where to look, right? So people try to look for interest rates and they go to bankrate.com and all they see are advertisements, but that's not actually what people are getting. That's like the most perfect scenario that they could come up with to show you the best rate. We have resources that we want to share with you, which is going to show you what the rates are. So you know where you're at in the market. You know what we're offering you is realistic. We know where we are in the market is. We're really competitive. And oh, by the way, if you use these resources to see where the rates are, which are accredited resources of the rates people are actually getting, not what people are quoting, it's going to help you make better decisions.
Yeah, no, that's always a big one. People tend to lean on what they find online, not just in this area, but in, everything. They give it a little bit more weight than maybe it needs to have. While there's some validity, not everything that you read online or search for online applies to you. So not with the mortgage rates, you might see some things that look more attractive than they actually are. So something good to be aware of. Anything else, Bill, that's a big one to kind of pay attention to?
Yeah, I think the other thing too is just, when you're talking to the lender, you want to make sure you're having a conversation where you're getting a really good feeling that they're knowledgeable, right? You're getting a good feeling in your gut that this person knows what they're talking about. They're on their game. They're not some part-time loan officer that closes 10 loans per year and things never close on time. And now your deposit's at risk and you're out of contract. In the real estate contract, there are a lot of performance agreements. The buyer has to perform by a certain date. We need to make sure that we meet all the dates. We need to make sure that you stay in contract. We need to make sure you get the settlement on time. So the person that you're talking to, they might be spitting out this super low rate. People are hyper rate focused, which rate is important, but by no means is it the only important thing. So somebody who's spitting out this low rate, but you're just, things aren't adding up, and it took 2 weeks to get an estimate with the details, and they just don't sound like they're super pushy and they're this. And, we want to be educational, informative, consultative, help you make the best decision. This is your decision. We're helping you to facilitate the best decision. So really take stock in who you're talking to and how that conversation is going.
Absolutely. And you can begin that conversation right now by calling 484-352-4151 or log on smartmortgageshow.com. You'll find all of our content there. We've covered a ton of different mortgage lending, home buying, just educational conversations we think will help you out a lot if you're in the process for the first time or not. Even if you've done this a couple of times, a lot of good information there on the website, so check that out. Also, please subscribe to the YouTube channel. If you haven't done that as well, we got new video every single week and other short content as well to find on the YouTube channel. So please hit subscribe there. Bill, any final thoughts on this before we close it out?
I think we've said it many times in case you've missed it, but talk to somebody who was referred by a trusted source. We believe in doing business locally. We always invite our customer into the office if they're within a certain distance. If not, we're going to do a Zoom meeting. So just, old school relationship based doing business and customer service and client experience is what yields the best result and the most consistent best result.
All right, very good. Well, thanks for your insight as always, Bill, and thank you for watching this episode of the Smart Mortgage Show. We'll talk to you next time.
Thanks so much.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.